Cathie Wood just bought more Tesla stock, and Dylan Loomis explained the state of the Tesla stock buying opportunity. He's the host of Electrified on YouTube. Also, I hurt my back a little bit, and the chair, I'm not sure how many bounces it can take, and it's not a cheap chair. These Herman Miller chairs are pretty pricey. When I do a bounce now, it makes a weird sound, although it doesn't make any sounds when I just move it. I have probably done over 1,000 bounces on this chair because sometimes I do more than one take, as it doesn't always work out the first time. So I think I will take a break from doing the bounces, at least until my back feels completely fine. And we'll see that maybe I'll just do it for some videos only. To all of you who have back pain, I feel the pain literally in my back. Although it's not that bad anymore, but for one moment it was pretty bad. And now let's get into what Dylan says about the Tesla stock buying opportunity. This is a real-life Tesla stock conversation from this weekend in a sauna with 12 people. I was asked what I do to have a flexible schedule, and mentioned part of it was being a YouTuber talking about Tesla. Everyone got quiet and it was on. In these situations, I like to ask questions, get a feel for the room, and try to understand how the general public really thinks. One guy in his 20s said he owns a few shares of Tesla stock, but that he is much more confident in other investments. Naturally, I asked him what they were, and he responded with Nextera and Tellurian. Part of his hesitancy with Tesla was a new argument. The competition is coming. Nextera is an electric utility holding company, and it has done quite well. Tellurian, on the other hand, is a natural gas company, and it has not exactly done that well, down 84% in the last 5 years. Dylan then continues, I then asked him what he knows about Tesla's energy division, to which he said, nothing. He knows nothing about it. Lesson, understand who you are talking to. Some people with strong opinions on Tesla don't actually know what they are talking about. So he owns 2 companies in the energy sector, basically, and yet he knows nothing about Tesla energy. Another gentleman in his 60s chimed in and said he was going to buy a Model 3 last year, but the wait was too long and he didn't like the price hike, so he bought something else. Lesson is, long wait times and higher prices have trade-offs. One of my friends looked at a Tesla vehicle, I think last June maybe, and the wait time was just way too long, and immediately it was a no. Not even a consideration, nothing, just an immediate no. Another guy was more interested in lithium stocks to play the sustainable energy movement. I told him it's not an area I study, but I use this to talk about Tesla's ambition as a sustainable energy company, and in my honest opinion, it's the best way to play the sustainable energy movement given Tesla's financials, talent, manufacturing prowess, vertical integration, software lead, etc., etc., etc. Outside of the guy in his 20s with a few fund shares, no one owned any Tesla stock. I have also rarely, if ever, come across someone from the public who can articulate even part of a Tesla bull thesis. For me, it's the exact same thing as well. There is still a massive disconnect between the truth of Tesla and the opportunity this decade and what normal everyday folks think or don't think at all about Tesla. If you think you missed the boat, think again. There is a great awakening coming where the masses realize what Tesla really is. Dylan hit the nail on the head here. Absolutely 100%. I agree with that. Dylan continues, I ended that conversation by saying not financial advice, but I have followed this company for a decade and studied it closely for 3 years. Tesla will be a multi-trillion-dollar company sometime in the next 10 years. I told my friends and family to buy some Tesla stock back in 2012, and no one did. Go look how that worked out. Really good insights from Dylan. Although I would not have bought Tesla stock back in 2012, my risk tolerance is just not that high. I want a company that I know for sure, in my condition, is going to be definitely profitable without any doubts at all. Elon Musk himself said that Tesla was on the verge of bankruptcy multiple times, and for me, that's a little bit too much to risk. But everyone who bought Tesla stock early, wow, that was a great decision. It took me until early 2019 to jump on Tesla stock. We also have some really good news for the Cybertruck. Pay attention to how this Model X trunk opens. Right here, nothing opens. So you sort of have to lift things up if you want to put them in. No big deal because the Model X is not that tall. But with a Ford 150 Lightning electric vehicle, it opens like this. So you can, for example, have a baby and you can easily change a diaper. Or if you need to put something heavy inside the trunk, you don't need to lift the things as high. Because, I mean, that truck is pretty tall already. So you would actually need to lift things quite high if it didn't open like that. And previously, Matthew said that the trunk in the Cybertruck opens exactly like the one in the Model X. But a Tesla employee now told him that the Cybertruck trunk opens more like this. So before, we thought that only the top, which is this area right here marked in red, would open. But now we are told this whole thing actually would open. That is certainly a big and welcome improvement. Next, we have a Tesla stock downgrade from Wolf Research. They downgraded Tesla stock from outperform to peer perform. Rod is no Gordon Johnson, so let's see what he has to say. We are still convinced of Tesla's impressive cost trajectory, which should propel impressive growth over time. I would change the word should to most likely, almost certainly, definitely, probably I would use one of these words. So I would disagree here, certainly. However, we have also become incrementally more concerned about macro challenges. Tesla has already had to cut prices quite a bit more than we expected. And we worry that macro challenges are intensifying in ways that could disproportionately affect the US EV makers. It's not so much that Tesla is really cutting prices, it's more that the interest rates went up, which made the cars much more expensive. So now to keep the price the same for consumers, you have to cut the price. And many other automakers are about to do the exact same thing. But many actually cannot because they don't have the profit margins to do that. So they will just simply lose sales. One example is the continued downturn in the tech sector, potentially now exacerbated by the implosion of a Silicon Valley bank. While deposit holders will be made whole, so they will have all their money, this was an important bank for this ecosystem, and we don't expect this hole to be filled immediately. Credit is likely to tighten. We would note, for example, that California accounted for a third of US EV sales in 2022. 41% for Tesla, and the tech industry accounts for roughly 20% of California's economy. That sounds all like temporary noise, nothing to be concerned about long term. We believe there's risk that tech spending will slow down even faster, and there will be larger layoffs. With regard to Tesla and auto stocks, we don't believe that a precise view on the macro outcome is possible at this point in time. Autos are durable goods and their purchases are deferred when consumers feel less financially secure. Recent events further deepen the uncertainty for the tech sector, startups, financial institutions, and many non-tech California businesses. All temporary. Nothing to worry about long term. Also, Tesla is quickly becoming an automaker for the masses, not just tech people. So I don't think that is really relevant, especially not long term. They then continue here. We have heard anecdotes of weaker demand for EVs from Lucid, Rivian, and others. Yeah, these were really funny, by the way. And that the situation could get worse if sentiment takes another hit. The firm also noted that Tesla stock is trading about 6% off its price target, which was set at $185 per share. I'm looking at the track record that Rod has specifically for Tesla stock, and it's actually really interesting. While overall he's not a bad analyst, with Tesla, ooh, even though he never said sell Tesla stock, average return for Tesla 9.7%. Okay, so if anything, this is actually really bullish. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.